Hello, everybody. Again, excuse me. Excuse me. This is John Oslin, the CEO of Gravity Investments, a 15-year-old proprietary portfolio quant company where $20 to $25 billion has been professionally managed using our patented science. Just a little bit of housekeeping. If we would encourage you to toggle to a full screen view, particularly when you see Gsphere in action. You can do that by going to your upper right corner of your screen, and you'll see some diagonal arrows. You touch that, it will give you full screen. Or you can hit an X in a circular box to the upper right, and then it allows you to also toggle a diagonal icon to get the full screen. We are recording today's webinar. We expect it to be no longer than 30 minutes. This is not scripted. It's members of our leadership team taking you through 8, 9, or 10 very relevant PowerPoint slides that we've had good feedback on. We'll do that crisply. I'll take the first 4 as CEO. Then Mr. Gary Murphy will finish that up. Mr. Murphy, like probably most of you on the call, has spent his career with the major custodians, with large RIA aggregators, ran a national business, reinvented and successfully ran a national business for TD Ameritrade and large regional businesses for Fidelity. The actual demonstration won't be done by a young technologist or a quant. Towards the end of the presentation, we'll do a really neat demo, again, all very live, not canned, actually crunching our data on the Amazon server, including market data going back over many, many years, generating portfolios for new client asset capture, because today's theme is about building your assets under management using our technologies and our investment strategies. And the demonstration will be by Mr. Gene Paulson, who built a tremendous career up in Michigan in the high net worth business owner and physician space with Merrill Lynch. So, you know, we've got a nice representation of wirehouses and the major RIA custodians. My partner and I, Jim Damschroeder, come out of technology. Jim will not be joining us today, but you'll see other topics. Jim is, I believe, the leading expert in the world on the science of diversification as it applies to a wealth management portfolio. That portfolio could be comprised of any asset class, any investment style. It can be global, it can be domestic. We can add value of 300 to 600 basis points to just about any strategy. Here you're looking at gsphere.net, which over the last several years from our deep quant heritage, we very much lightened it up, re-architected it. It's hosted at Amazon. It's a very leading edge, fully mobile cloud application, an area that's getting tremendous valuations. There was a big feature story in the Wall Street Journal on Friday comparing what we and our competitors are doing to the valuations of Uber. So that, you know, a lot of smart people think this is a true watershed event in the industry, and that's the Gsphere Robo for advisors. It's to help you. It's not to compete with you by going to retail. We pledge you we will not go to retail, although we're very excited about working with family office. So you're looking at right now you're looking at a mobile tablet, likely an Apple, and any industry standard browser. Our applications run inside that very eloquently. You don't need to buy any technology. You don't have to consult with any IT people. You don't have to deal with day-in market data. All that's done, fully hosted, fully turnkey to help us all build our assets under management. In fact, the application you're looking at can be embedded inside your firm's website, put under your firm's brand and coloring, all of which we will do at no additional cost to encourage you to allow us to sub-advise on more and more tiers of assets under management. I'll talk about that when I wrap up later after Gary and after Mr. Paulson's live demonstration of Gsphere. Next slide, please, Gary. Here's a nice intro, and again, in respect for your time, I've got just one more intro slide that has to do with our qualifications and some neat things that are happening from a PR standpoint and a research standpoint with some major universities on the efficacy of Gsphere. It is quite efficacious, but what's kind of fun is it's a tremendous differentiator out in the field in an industry that's become very commoditized with tremendous margin pressures, and we're all trying to do something that's a little bit different. So on the left is Gsphere showing the Morningstar style box. a product over the years that a lot of people thought, oh, that might be a prudent product, well diversified. Well, it's horribly diversified, which means it's wildly risky in any type of sideways market, let alone a bear market, let alone in 2008 is catastrophic. It's probably from a fiduciary standpoint absolutely imprudent. Well, then we moved to the stock and bond model, where diversification used to be easy over the last 2 or 3 decades. Oh, stock and bonds, eggs in baskets. Maybe some prudent alternatives. And you notice with the stock and bond model, it's still very insufficiently diversified. And it's our patents and sciences and technologies that allow people to see this for the first time. We're the only company in the world that can visualize portfolios in multiple dimensions, measure their diversification against a number of patented technologies, search for improved diversification globally as an in-house service as a sub-advisor, and we have the top optimization science for superior weighting in the world. We are the feature story in the commemorative Legends issue of the Journal of Indices, led by Jim and 5 quants and some major universities. And I'll talk about that here in a second, but that's the far right portfolio. That's what we call a true diversification portfolio, or a portfolio that's diversification weighted. A wonderful breadth of diversification, tremendous stability, able to absolutely mitigate losses in bear markets, and able to harvest performance by actually benefiting from volatility in choppy markets. Likely what we're looking at for the next several years, I think, to put that lightly. So we take Dr. Markowitz's modern theory, which really isn't that modern because it was invented in 1952, and we add multiple dimensions to it and make it holistic, not two-dimensional relativistic. And in a black swan, there's some real flaws with modern portfolio theory. And one more intro slide, if you would please bear with me, Gary, to the next slide, please. Excuse my voice, it's a little hoarse today. My wife and I came down with a really nasty flu after babysitting our first grandchild this weekend, who spends her days in daycare and can really spread it around. As I mentioned, 20 billion, if not 25 billion, has been professionally managed by Gsphere over the last 15 years. Feature story in the commemorative Legends issue of the Journal of Indices, we consistently generated tremendous alpha. We were frankly even a little surprised. 6.5% for 18 years using our technology very scientifically, peer reviewed against the cap-weighted S&P 500. And we consistently crushed it, picking up 427 basis points per year on average over 3 full market cycles. And while not increasing risk, reducing risk a little bit. And that technology and our strategies, and Mr. Murphy will give you a preview of our investment strategies, they overlay nicely against any type of index or security universe or security sets, what have you. As a result of that, we're the first company in America that's in a true portfolio fee-sharing partnership with the leadership team at Lipper, a set of products we're excited about. And as of about 3 months ago, we are a true Tier 1 research partner with the Quant School of Cornell. They came to me. We're not paying for that in any way, shape, or form. 10 of their top students from all around the world, true mathematically gifted people like our team on that side of the business, are assigned to us for the year. And that was to get access to our technology and get them mentored by our portfolio team. And the 2 of their top professors will be publishing a lot of the findings, leading to hedge fund type strategies for the masses. So there'll be some really beneficial commercial output for, again, building assets under management. My last comment, Dr. Markowitz is a big fan of my partner, Jim Damschroeder. And this is what in writing, he's given us permission to quote him exactly, and I need to be very careful on that because, he's in a number of businesses too, and is widely published. Your graphics are spectacular, and diversification maximization may be the next hot thing. With that, I'd like to introduce Mr. Gary Murphy. Thank you.
Thank you, John. I appreciate it, and hello, everybody. As John mentioned earlier, we actually have $20 to $25 billion being managed by our clients using our software as a service. And we're helping them capture new assets using our Gsphere.net, which Gene Parlson will demonstrate for you. We're also helping them build organic assets under management through superior portfolio construction and investment methodology analytics. We use superior asset class and inefficient security screening and filtering, which we will demonstrate for you as well. Our client value proposition is threefold: sales and marketing, operations, and performance. Under sales and marketing, it really differentiates yourself from the other advisor up the street or around the corner. And by using the objective analysis, you'll build trust with your clients. On the operations side, by using us as sub-advisors, we allow more time for you to sell and service your clients, get out on the golf course if you can. We do take on the operation and fiduciary responsibility for our models. And performance, as John pointed out, we do increase diversification, we decrease risk, and we typically do 300 to 600 basis points better for the same strategy against a capitalization-weighted benchmark. We've seen 4 prominent industry trends converging, those being the alternative investments, smart beta, alternative weighting, and robo advisors. And there's no company better positioned with the intellectual property and plan than Gravity Investment and Gravity Capital Partners. Dr. Markowitz didn't patent the efficient frontier. Can you imagine if he would have? And we actually have patented our technology as well. We found that old school asset classes, are not inclusive enough. They're too correlated, too general markets, too interrelated, particularly during bear markets and or times of distress. We need to include low and non-correlated assets and better understand the interrelationship of these asset classes for true diversification. True diversification provides a means to measure and optimize all asset classes and their interdependencies. True diversification eliminates maximum amount of non-systemic risk from the portfolio, which we will demonstrate as well. And as I pointed out a slide or two earlier, it provides superior downside protection without materially sacrificing the upmarket performance. Stuart Frank, who's the founder and chief executive officer of Precision Fiduciary Analytics, which is a private fiduciary consultant firm located in Michigan. He actually provides independent diversification monitoring services for clients' portfolios totaling more than $200 million in assets. Stuart earned a Bachelor of Business Administration from the Ross School of Business at the University of Michigan, and he has provided litigation consultant and expert witness services involving breach of fiduciary duty matters throughout the country in federal and numerous state jurisdictions, as well as FINRA arbitrations. And if you're a fiduciary or trustee, you understand that you have a lot more risk on the table. Stuart says, failure to diversify on a reasonable basis to reduce uncompensated risk is a violation of both the fiduciary duty of caution and the fiduciary duties of care and skill. So if you want to find out more about that, let us know and we can actually do a presentation with Stuart. Gravity Capital Partners strategy is now approved for interactive brokers. We really like interactive brokers. They were ranked #1 by Barron's as an online trading platform. We really love their technology as well as their economics. We also are approved for Placemark, which opens the doors for us to work with Charles Schwab and Company, Fidelity, TD Ameritrade, Pershing, and Royal Bank of Canada. We're also approved for an investment fund strategist network and Folio FN. You can see the list of our portfolios. They're all diversification weighted, and you can see the Lipper leader growth and the Lipper leader balance that John mentioned earlier. And if you want to see the actual strategies and read more about them, you can go to www.gravityinvestments.com/strategies/. As I mentioned before, true diversification builds and preserves assets under management. It's systematic, scientific, process-driven, and quantitative. If you want to see the performance, you can go to www.gravityinvestments.com/resources. The nice thing about working with us, it's turnkey. Gravity maintains the models online at gsphere.net, and as John pointed out, all you need is a laptop or tablet, and Gsphere is hosted on your browser. This is an example similar to the first slide, which shows on the left a portfolio that has been built for our client, and then on the right it shows one of our strategies. And you can see down at the bottom the gauges, which show systemic risk, non-systemic risk, and the total risk. And Mr. Paulson will go through that for you as well. And we can actually train you on this technology as well. So with that, I'm going to turn it over to Gene. And as it's pulling up, as John mentioned earlier, you can go to the arrows in the top right corner to make your screen bigger so you can see the technology in a larger screen.
Good afternoon, and thank you for joining us. I get to show the good part, the magic of this system that has two advantages. One, a great advantage to your client in that you're able to actually build them portfolios that are truly diversified and measure it and show it, but also to yourself, where you can differentiate yourself from your competitors. As opposed to using a flat Morningstar type presentation, you're able to really show them a difference using this technology. I'm going to run through this briefly, but our first tab here is the Investor tab, where you're going to load names, addresses, emails, etc. of your clients and prospects that you can refer back to. We also maintain a list of portfolios that you've entered into your system. And this is loading up for me. And this just shows many different portfolios that have loaded into the system. One of the beauties of this thing is I can take a portfolio and I can view it. Or if I want to play with it, I can clone it without disturbing the first one and having to re-enter it all. And I can do additions and changes to it by editing it. So this is just strictly a listing. Here's where we start getting into the magic of the technology. Here's where I get to load a portfolio. I can do it by entering the symbols of the portfolio, and then along with that, then I can start adding an allocation, the shares or the value, and it'll compute it for you. Or I can come over here and I can load an Excel file of a portfolio, and it'll do the same loading. In this case, for the sake of time, I'm just going to pick one here that I threw in here. Where's my Gene EQ? And in this particular case, we were working with $1 million, so I'm going to leave it the same. And I'm going to import that portfolio. And again, you could have done this by symbol or by Excel, or if you've already got it stored in your system, you can pull it up in this regard. So now I've loaded the portfolio. And we'll just call this one, let's see, WebEx Demo. And I'm going to ask the system to calculate this portfolio for me. All of this is live using real numbers, live numbers. And what we're doing here is we are measuring the diversification of this specific portfolio. I've got different options I can do. In this case, I'm going to throw in what we call the style boxes, or we can refer to them more as the risk boxes. But as you can see, we have a lot of empty holes in this particular portfolio. On a systematic basis, we're in a cautionary zone, the same on a non-systemic basis, and we definitely are exposed from an overall exposure. We use, different allocation charts, et cetera, that you can use to explain or show to clients. But where I think the important part of this is right down here in the diversification sources chart, or I'll refer to as the KLD chart. A beautifully diversified portfolio will fill in all of this area below this axis line here. As you can see in this portfolio, we have one dimension, most likely the market index, that's going to control 52% of this portfolio. So if you have a black swan event, et cetera, we've got a big hole here. And then we have some various steps going forward. This particular portfolio analysis can be shown live to a client at your desk or on a big screen in a presentation room. It can be also, and I'm not going to do it for the sake of time, I'm going to do one at the end. I can click report, and I can actually print this out. It can be, again, given to a client, or it can be emailed to a client in PDF form so that they can go through all of the numbers and the dimensions that we're looking at here. But again, the key here is when you're looking at the various style boxes or risk boxes, how many boxes we do not have covered. Where the real beauty of this comes up is when we use our compare function. This one's loading for me. I'm going to use the same the portfolio I just used. Just for comparison, I'm going to pull up the our diversification weighted Lipper Leader growth portfolio and compare it. This helps generate not only a proposal that can be used to sell to a client, it can be used to show the shortcomings of an existing portfolio and how they might be improved. So from a competitive point of view, you are really demonstrating and holistically showing a client a difference from where they are versus where they can go. And again, I can throw the style boxes into these things here, and you can just play with this, whatever works for you from a demonstration point of view. I then come down here under portfolio observations. I've used a 1-year observation in this presentation, but I can go anywhere from 1 month to 10 years in putting this thing together. Coming back to the meters or gauges, as you remember, we are cautionary and exposed on a total basis on the diversification on this portfolio. Adding this one product sleeve up here, I've moved this into good, and good. So from a systematic, non-systematic, on a total portfolio basis, we've greatly improved diversification. Profit and loss, we measure which portfolio is doing best at any given period. As John mentioned, the DW 500 earlier, and the outperformance on an alpha basis. We don't claim to be monthly or day trading type activities where we're not going to be ahead or beyond in any given week or month, but over a market cycle, this program has proven to be extremely effective. And again, typical type charts, allocations, but here's the beautiful chart. This is a patented technology. Is, as you can remember, the first portfolio, we had like a 52% exposure to one dimension from a market point of view, and then we had some steps. With the portfolio I've added to do a comparison with, you can see that we have added much more of a diversification load in here, getting everything much closer to this axis, showing much greater diversification. As you can see here in the risk and return chart, the returns have been extremely positive, yet we've not taken the extent of risk that's showing up in these other, in the existing portfolio. Coming back here, this is where I can hit report. And again, this can be put on a big screen on your laptop, printed as a PDF and given to your client, and or, you know, be in a PDF form emailed to your client. Down here, I'm just going to remove a couple of these just to, let's see, just to shorten the length of time it takes to crunch. Section that the compliance people love. I can put various things into my report, past performance, and okay, I'll say it's not FDIC insured. You can type in or write in anything you want to appear on the report, and then you then ask the system to generate a report. And again, this is crunching the numbers live. Takes a minute to load it all up. But this is a true differentiation type system that really allows you to stand out versus the competition, give your client an extremely beneficial overview and portfolio, and then show it to them. Here's the report that's generated. Now, I think we might have pointed out earlier, but if not, any of these reports or our web page or anything else can be privately branded to your firm, and it looks like it's coming right out of your section. What I've done here is I've put together this is a PDF form. Your client gets it, but they can sit here and they can play with it. They can roll it around. Come down here, I'm showing my gauges again. They don't change, they're the same as we showed you the prior. Risk and return charts, again, showing that same type returns for less exposure. Allocation charts. And again, here is the dramatic chart. This is the one that will grab your client's attention. I've had a number of advisors tell me, and my experience tells me the same. Clients are visual. Everyone has a better mousetrap, but when you show them scientifically that there's a huge difference between their existing portfolio and where the diversification sleeves can bring them, it's truly an eye-opener for them and definitely gets their attention and separates you from your competition. So with that, John, I'm going to turn it back over to you.
Thank you, Gene. I've got just 2 minutes of wrap-up comments, and I wanted to thank everybody for being professional. I think we had a technical bug, and we didn't get everybody's mics muted, but I think everybody's been very professional. Our marketing team will follow up, but they'll follow up professionally. I don't mean our sales team's going to call you, but our marketing team will continue to send out information. We take pride that it's educational and useful. And then that will give you options if you'd like to learn more about certain technologies. And again, just to kind of recap, we're a 15-year-old quantitative tools company that's got diversification technology deeper than I believe anything that's available. We have successfully transitioned to where we are now a wealth manager that will only work with other financial advisors, wealth managers, and institutions. Where, again, about $25 billion has been managed in those verticals, from family office to fund of funds to RIAs to broker-dealers, multifamily office, as well as in Europe and Asia. Our programs tend to be tiered at $5 million, $10 million, and $20 million, so we typically do not license our technology anymore, but we will literally give more and more of it to you and eventually even connect you with a CFA rather than a salesperson, and give you concierge support. That's at, say, at the $20 million level, where Gravity on Gravity's nickel will also private brand and customize this whole program for you. And at $10 million, we'll embed all the technologies you saw today for sales and marketing, even down to retail prospects in your website. And we also will get very involved as a true partner with our client partners in casework going after a high net worth business. And we're very excited about going in the doors you can open, hands-on in the retirement space, foundations, endowments. We want to go there through advisors, again, not competing with you. And we will even protect territories because we believe our differentiation is so strong. So again, our marketing department will be in touch wanted to hold this to exactly 30 minutes. And I want to thank everybody for listening to us, and we will send you a recorded copy of this presentation as we promised. So thank you very much, and have a good evening. Bye-bye.